Hi, everybody, and welcome back to another video about crypto taxes in the US. I'm Moritz from CoinTracking, and I'm with you today with your crypto tax attorney and crypto tax auditor, Clinton from Crypto Tax Audit. Today we have a pretty juicy topic. It's called How to Legally Reduce Your Crypto Taxes in the US. And I think most of our users and viewers are pretty excited to learn about how to avoid taxes and how to be better prepared for your tax return. But first, can you give some insights for our beginner viewers about how to file your taxes in the first place, just like in 2 or 3 sentences?
A tax return that reports cryptocurrency is just your regular tax return, but you have to list the capital gains and losses, which the coin tracking application is magnificent at doing. Now, but preparing a crypto tax return is sometimes more than just reporting the gains and losses. If you have staking income, where do I put that on a tax return? If I've been doing a lot of transactions, high frequency transactions on other websites, where do I put that on my tax return? We've developed on our website, cryptotaxaudit.com. If you pull down the menu there, you'll see do your own taxes. And we have a web page that will explain how to do your own taxes. And we have a video course that's absolutely free where we'll show you how to use one of the free file tax software packages. It's a high functioning one to do all the sophisticated things that you would like to have done on your tax return to report what you need to do to keep yourself safe from the IRS. So that's on cryptotaxaudit.com. You pull down the do your own taxes, and I think you'll enjoy that. If your taxes are too complicated, then you need to get professional help either in the gain calculation or in the tax return preparation. And you can go to the contact webpage and they can help you out with that.
Thank you, Clinton. Yeah, for every beginners, I can really recommend doing that. Crypto is a very difficult space, and crypto taxes are it's sometimes like a jungle, especially if you don't have much experience, either trading or reporting your taxes. So go on the website, check this out. It sounds pretty nice. I will test that myself. But now let's get into the main topic, Clinton. This topic is probably for the more advanced crypto traders or let's say crypto users in general, because it's a question you ask yourself most of the time when you have some earnings and when you have to pay your taxes. And it's basically, how do I avoid a higher tax burden? How can I do that? What strategies can I use? And what do tax attorneys recommend to reduce the tax burden of your earnings?
Well, typically the best time to reduce the taxes is before the end of the year. So, for example, how do I reduce my taxes from last year? Well, not much because you've pretty much the year is over. There's very little you can do other than playing with some accounting manipulations. So this year, 2024, since there's a good expectation that the market's going to go significantly up, if you sell, then you experience a gain. Very key in American tax law. You only have to pay taxes on gains you've realized. So the best way to reduce your taxes is not to sell until the very last minute. At that point in time, you have a gain. At the end of the year, what I recommend in like the November, December timeframe, as we look at how much gains you have, you might want to take advantage of a feature called tax loss harvesting, where some of the investments you've made have gone down and you want to recognize those as losses because at the end of the year, your losses reduce your gains. It's like a silver lining of losses. So you don't need any more losses than you have gains because going negative it doesn't help you on your taxes. And coin tracking has good tools for helping you do your tax loss harvesting. But put that in your mind. November, December, you want to start thinking about harvesting those tax losses. What can I do right now in terms of reducing taxes? I would say the number one way that many people can reduce their taxes is to do a good gain calculation.
What is a good gain calculation?
Well, we feel the coin tracking is a magnificent gain calculation engine. All right, it calculates your gain or losses from your trading. Now, uh, you as our listener, you're probably an amazing trader and you've made some amazing trades. You're making great money. That and you know what you did, but that doesn't make you a good uh, accountant. It doesn't make you a good bookkeeper of your trading activity. A lot of people follow the steps with CoinTracking, and CoinTracking is as easy to use as all of them. Loading in their data, they start running some of the programs, and then they get lost in the detail, and they go with the number they find. What we have found is frequently people are over-reporting how much income they made because they've made numerous mistakes. These are mistakes that despite the best effort on CoinTracking's website to raise these to people's awareness, they just simply miss out on it. So uh, the first rule I would say is when you've done your gain calculation on CoinTracking, if the number in terms of the amount of profit you made at the end of the year doesn't like resonate right here in your heart, it's not, it's not in the range of what you were expecting, then do not assume that it's correct. It's probably wrong. I would say now at our company, we do full service gain calculation using CoinTracking tool, and it's expensive to be sure, and most of our clients are quite large, but we typically find that we save them money by doing the gain calculation for them. What do I mean by that? We come up with a significantly lower amount of profit, and that profit translates in tax savings that pretty much pays for our full service offering. So if you're a medium to large investor, this might be something you'd consider. But if you're a smaller investor, just report something you believe in. That
Okay,
would
so
be
the first mistake is like, okay, having a difference between the expectation and the actual number that is first on the paper. But then comes the second mistakes, just taking this number for granted, or just thinking this is the real number without testing or double checking whether this calculated gain is correct.
absolutely. I had a woman call up. She'd been doing DeFi trading. She goes, "We have no idea how much you make." I said, "Well, okay, we can't do it. We have no idea how much you make." Well, Rick, wait a second. Did you lose $1 million? No, no, no. We didn't lose $1 million. Did you make $1 million? No, no, no. We didn't make $1 million. I said, "Well, good. We got a range. Somewhere between those two numbers. Now let's start narrowing it down." And
Yeah.
despite her denials of not knowing how much she did, she had a good range. And I'll tell you another story. I had a client who had made he was using another service, not CoinTracking, and this service came back and said he made $120 million in profit. Now, he did make a lot of profit, but he didn't think it was 120 million. All right. I asked him, "What do you think you made?" He said, "I think I made between 40 million and 80 million. All right. I said,
Okay.
"Huh, well, sounds like if we split the difference, sounds like you think you made $60 million." He said, "Yeah." I said, "Well, why don't we look at that?" Now, it turns out we had to file and use a $60 million estimate, but we came back later and did an amended return. When we'd finally done the gain calculation using the coin tracking tool, our experts, our forensic accountants, came up with a total of $61 million in gain. All right. Now, I'm talking big numbers and millions. That's very entertaining, but it's just in order of magnitude. It's just like your own life. All right. Maybe you're not in millions. Maybe you're in the thousands. Maybe you're in the hundreds. Report a number on your tax return that you believe in. And if you do, if you get audited, odds are you're going to do very well. And even in somebody who's making as wide a range as between 40 and 80 million, our estimate came in right in there. His gut feeling was far more accurate than the number he was getting on this other gain calculation service. Believe in yourself. Nobody understands how much money you made intuitively better than you did.
Okay, so but so far we have two ways to reduce your taxes or tax burden. The first is the loss harvesting at the end of the year, especially for coins that are down anyway. And the second one is to report correctly and to report as it fits with your gut, and that is, most time the right thing and way lower than some tax calculators might get a number in the first place. What is the third option you can do to reduce your taxes?
Well, let's talk about this in terms of reducing the pain of taxes. Here's 7 words I want you to write down. Make money, pay taxes, make more money. So that's 7 words. Make money, pay taxes, make more money. What am I saying? I'm saying as you sell, take a portion of what you sell and take it out of your investment account and put it into a separate account. Let's call it the tax account. Okay. And then with what's left, you continue to go and make money. This is how all wealthy people operate. What's the alternative? The alternative, and this is the bad alternative, is the make money, make more money, and then pay taxes. Why is that a bad alternative? Because people wait to the end of the year to pay their taxes. I had a client who was making lots of money in one of the last bull runs. He set aside $1 million to pay his taxes. And he said, well, why should I take it out of the market? I can, instead of saving it in cash, I can invest it in a stable coin. And this stable coin allowed him to stake it. And he was making interest. And
Yes.
he held it there until his taxes were done calculating. And when he was ready to pay the taxes, guess what he had chosen to keep his money in? This $1 million. He kept it in
Yes.
Luna. And Luna crashed. Luna went down. He lost $1
Yes.
million. The next thing I want you to write down, USD is the best stable coin. All right. USD is the best stable coin to keep your tax money in. Now, that's having said that, we also this is another way significantly to save on your taxes is to keep the money there. Another story, I had a guy who at the end of 2017 was the bull market was actually peaked in January of 2018. He said, go ahead, I want to
Mm.
file my taxes. But he kept his money in crypto. This is his tax money. Well, by the time April rolled around, the market had collapsed 50%. And now his tax money had gone away. He couldn't sell his remaining assets because he felt like that's all the wealth they have. And
Yeah.
he instantly shifted into tax evasion mode. So always, whenever you do a sale, take a portion of it, maybe 15%, set it over into your cash account for paying taxes. And you will not
Okay.
cry when tax season comes, dude.
That's those are some magnificent. I'm sorry. I'm just flashed of those nice tips you have. But I just try to recall the sentence: make money, pay taxes, make more money, and
Absolutely.
USD is the safest stablecoin.
USD is the safest stable coin.
Okay, so saving up your for your taxes can at least reduce, the hard feelings you get when you can't pay your taxes and you have to pay them anyway. That's a good preparation. And now, as you already know, we are kind of getting out of a bear cycle right now. We don't know where it is heading yet with crypto, but let's say we had some 2 rough years, at least 2022, but also 2023 was not that funny. But that can help you with your taxes. Can you give our viewers some advice on how to use those down years where the market is a little bit more uncertain? We lost a lot of percentage there. And what can crypto traders do to reduce their taxes in those years, especially? Or going forward, is there any carrying forward of some losses into other years, or is that
Well, it's very important. If you had losses in 2022 or 2023, you want to report these losses. The silver lining of a loss is that it reduces the how much taxes you pay on your gains. Let me tell you a story. In 2020, a doctor called me up, and he told me, well, 2000 actually 2022. He called me up. He had made or 2021. He made a lot of money in 2021 and 20 when the market ran up, and he said, I made $1 million trading crypto, and I need help because I'm going to have to pay the taxes on that. And he said, I don't know what to do. And I said, tell me, when did you first start trading crypto? He said, I started trading, many years earlier, 2018. I said, well, how did you do? He said, well, 2008. I said, 2018, 2019, down years. He said, well, in 2018, I lost 600,000. In 2019, I lost another 400,000. He said, but I didn't report these these losses on my tax return because I didn't want my wife to know I had these losses.
Oh,
Now I have this gain, and like, I'm I don't want to be crushed. I said,
yeah.
I got great news for you. We're going to go back and amend your tax returns for 18 and 19. We're going to report the losses because you had $1 million of losses. And although you can only take $3,000 of a loss on a year in any given year, the excess rolls over to the next year, 2020. So it completely offsets those taxes. You're not going to owe anything. He was so happy. So do not give up on losses. Losses are a silver lining. Keep them, claim them, and they're going to be your friends for reducing your taxes.
That's the good thing about carrying forward of losses. But I have another question. Did the wife find out after all?
Well, people never tell those stories. I think maybe of course, the amended return had to be signed by the wife. So if he were smart, he would have slipped it in at the time he was signing the return for 2020. That's what I would have recommended.
Yeah, but you can see you should never lie to your wife, right?
Another thing is you shouldn't lie to your wife. And another thing is, don't assume that you understand taxes. The U.S. tax system is inordinately complex, and it's not really the IRS's fault. There's these guys in Congress called senators and representatives that think they're helping us out by making it more complex, right? Get a hold of a professional, talk about your situation. If you need you can call. All our staff are all CPAs and enrolled agents. You can call up our staff, schedule a call, and talk over your situation. And maybe we'll give you insight and help you use your existing accountant or your existing gain calculation service to get to a situation where you feel safe and comfortable. And most importantly, if you've been a trader for a while, I'd highly recommend you consider using a protection mechanism called IRS Guard Dog, which allows you to monitor your prior year filings, and we can see if the IRS at any given time selects one of your returns for audits. At Crypto Tax Audit, we specialize in defending people in audits, and we have 4 pricing options, monthly subscriptions from a $12 entry price per month to a full, basically insurance mode, where we defend people all the way through a crypto audit, appeals, up into tax court. We just won a massive tax court case where the IRS claimed the person owed $1.5 million. My in-house forensic accountants did the gain calculation. We attacked the IRS's gain calculation, came up with an 88-page document that we gave to the IRS, destroyed their numbers, and they completely caved the tax court case, and it was a no-change audit. And so we're having this type of success repeatedly. So I highly think this is the type of. We're doing a survey right now on Twitter. Do you think the IRS will be fair when they do your gain calculation during an audit? 90% of the people say no, and it's true. It's not necessarily it's intentional. It's just that it's complicated, and they're not any better at it than you might be. So I highly recommend, and I think they can go from your website to see how to get the IRS Guard Dog membership that's right for you.
Okay. Clinton, that was a great insight. Thank you very much. I just want to summarize everything in general. If you want to reduce your tax burden, use tax loss harvesting, monitor your crypto trading and the generated profit closely and double check it. Carry your loss forward into different years, and please tell your wife. So, thank you very much, Clinton. If you like this video, please leave a comment, like, and share the video. And stay tuned for our next video, which will be more basic for our beginner viewers. And Clinton, hope to see you next time. Thank you very much.
Thank you very much, Moritz. And remember, taxes are sexy.
Thank you very much for listening to today's show, and I hope you enjoy it. Please give us comments. We would love to respond to any questions you give us. You have tax questions that we can apply to. We will try to address it in future shows. Please hit like, subscribe, follow. Thank you. Have a great day.
The Clinton Donnelly Show, where we explore how taxation and regulations of cryptocurrencies affect your daily life as an investor. Clinton has a law degree in international financial regulation. He is an enrolled agent and certified as a cryptocurrency anti-financial crime specialist. He has clients in 71 countries. He is one of the top experts in crypto taxation in the US. This show is sponsored by CryptoTaxAudit.com, the income tax experts for US crypto investors. Are you frustrated with using online crypto tax services to calculate capital gains? Are you a high-frequency trader, DeFi, NFT, play-to-earn or whale investor? Nothing is too complicated for the experts at CryptoTaxAudit.com. Are you frustrated that your accountant doesn't understand crypto taxes? Crypto Tax Audit uses a proven, bulletproof crypto tax return methodology to prepare a tax return that doesn't attract the attention of the IRS. Crypto Tax Audit also offers an exclusive audit defense membership service. It's like car insurance for your tax return. If your return gets selected for an audit of crypto reporting, they will defend you at no additional charge for the entire life of the audit. No one offers anything like audit defense membership. Go to CryptoTaxAudit.com to learn more and schedule a private tax consultation now. The opinions expressed in this show are not legal advice. Tax and regulations are complicated. Your situation is unique, so you should always consult a tax professional.